is biotech investing right now. Where exactly do you then see the opportunities? Is it in some of those bigger names like GlaxoSmithKline, GSK, or are you still looking at some of those up-and-coming companies that none of us have really ever heard about?
Yeah, thanks, Dom. I would say that the focus right now that my new organization has within the JP Morgan private capital structure is to look at some biotechnology companies that are up and coming. In fact, in many cases, we'll be looking at companies that are just forming and just developing their strategies. I think Emma said it best. You know, we're at what she called a golden age of biotechnology. I couldn't agree with her more. Innovation is accelerating at a pace unlike I've ever seen in the 38 years I've been in the business. And all of that is occurring at the same time we've seen over the last 2 years or so a pretty significant pullback and correction in the valuation of these companies in the marketplace, both on the public side and actually probably more recently on the private side as well. So we see this as a tremendous opportunity to dive in as investors. You have a convergence of ongoing, accelerating technological innovation in the biotechnology space, and a lot of that is occurring in small startup companies at the same time where valuations have come down, offering a real opportunity to get in and actually help guide these companies towards successful outcomes.
Now, what's interesting about that, you bring up two probably tangential points here. You talk about the pullback that we've seen. That pullback was from an extremely and relatively high level, given all of the interest around medicine, biotechnology that happened in the wake of the COVID-19 pandemic. We saw so much interest flowing towards healthcare. If you look at some of the exchange-traded funds that track the industry, you can kind of see it. Massive moves higher, and then the pullback that we've seen. Yeah. I guess in that way, is it fair to say that the technology innovation push that you mentioned, powering the golden age that you see it right now, was brought on because of the hyper-focus and perhaps regulatory view of biotechnology during the COVID pandemic, and what we can expect to see acceleration-wise going forward?
You know, I think if one looks back, and we all are looking back and trying to understand really what happened in the marketplace over the last couple of years, I won't comment on all the macroeconomic factors that probably influence the pullback in the marketplace. There are others far more experienced than I am in that particular topic. If I look at what I think has happened specifically within the industry, the biotech industry and the financial piece of the biotech industry in the last couple of years, I think what I've witnessed is a lot of inflowing capital has come into the marketplace, particularly in the last couple of years. I think some of that, Dom, as you suggested, was the exuberism we had over seeing new innovative therapies coming along for COVID-19, both antibodies and vaccines. So a lot of new investment funds were raised over the last couple of years. In some cases, these were multi-billion-dollar funds. That created a very new pool of capital. And that new pool of capital led to the formation of a lot of new biotech companies. Maybe too many, some might argue, in the industry, all going after similar targets. And you have to look at that as a convergence of that new capital with the exuberism and the enthusiasm on the part of investors to be in that space, given what they were seeing with COVID-19. But I think in the end, it pulled us away from what I would call the fundamentals of biotech investing, which is, you know, do the work, do the diligence, understand the assets at hand, understand the developmental plan and program for those assets, what outcomes need to happen in order for that product to be a commercially viable product, get to know and understand the qualifications of the management team. This takes time and effort, but generally when one has the opportunity to do that level of diligence, I think the outcomes in terms of the investment strategy are better. And I think with all the new capital that came into the marketplace, maybe we lost track a little bit of kind of the fundamentals of biotech investing. And I think the bars got set very high on the part of the investors. A lot of these young companies went public before they had clinical data in terms of their lead product programs and strategy. And I think the disappointment that occurred from some of these companies going public very early and not satisfying, the high bar set by the investment community sort of all led to this fairly significant decline in at least one of the indices, the XBI, that's probably down 40–50% from its peak in early 2020.
You mentioned the XBI. It's a more equal-weighted index ETF that tracks these companies, which means that smaller and mid-sized biotechs get the same amount of weight as a mega cap perhaps does, like a Pfizer. That has now underperformed some of the mega cap names out there. You mentioned in your response just now the targets that all of these companies are going after. Many of them are similar. This month, Stephen, massive deal for Seagen to be acquired by Pfizer. This is very much about cancer treatments. You have a background and expertise, not just there, but also in orphan diseases, rare diseases. Where do you think the biggest opportunities are in some of those small and mid-cap biotech names? Is it going to be going after that big cancer beast, whatever cancer it is, or is it more towards some of those novel viruses, novel diseases, and orphan-type diseases?
I actually think it's going to be a combination, Dom. I don't think it's going to be one or the other. What I have seen in the 38 years I've been in the business is you'll see, and particularly now, the launch of some new products that are going to revolutionize how we think about the treatment of certain diseases. We've seen the first opportunities really emerge, for example, in Alzheimer's disease. We're starting to see products that are performing reasonably well clinically for mental health problems such as schizophrenia and even depression. We've seen drugs now emerge with positive clinical data in other diseases that have been difficult to target over the years. That's the good news. Now, take that for example, there are going to be young companies emerging that are already thinking about what the next generation of product is going to look like in some of those areas. I think an area that we can comment on, for example, let's take obesity. And you look at some of the drugs that are emerging in the marketplace now that are for the treatment of obesity. And those are projected to be some of the best-selling drugs in the history of our industry. Yet they're not perfect drugs. They're good drugs. They may even be great drugs. But is there an opportunity to create a next generation obesity product or a next generation product to treat Alzheimer's disease as we learn more and more about the genetics and the biology of these diseases? I would argue that the answer is yes. So those are the kinds of companies that we will be looking at JP Morgan that are thinking about creating the next generation of products, even for some large diseases. Now, you mentioned orphan diseases. There are still some 7,000 orphan diseases out there for which no treatment exists. So I do believe there is still opportunity there as well.
Now, Stephen, we've just got a few moments left here. I'd like to close. You mentioned that you don't have a lot of macroeconomic insight, but you are helping to run investments for a venture private equity type entity that is subject to the conditions that we've seen. Silicon Valley Bank was one of the financial institutions that did a lot of business and dealings with many early-stage startups in biotechnology. Also, we've got conditions for interest rates on the rise. All of those affect the way that private equity and venture capital investing operates. Do you think that environment gets tougher, and how?
Well, look, I think the SVB issue, was a bit of an earthquake for around for about I don't know, maybe 72 hours or so. I think it was good to see the FDIC step in, other banks stepped in. I'm confident we'll get through that. I can't comment on where interest rates are going, but it is a difficult environment. There is no question it's a more challenging investing environment today than it has been in a long time. But I think that sort of reinforces some of the ideas that I brought forth earlier, which is going back to the fundamentals of what it takes to make a good investment in a biotechnology company. And I think if we can do that and get back to those fundamentals and take the time to really dig in and understand the opportunity, surround those companies with top-tier management, I think the industry will thrive, and I think we're likely to see some pretty significant ongoing exits in the industry as well. You brought up the Seagen acquisition. I think there's more to come on that front as well.